afternoon. You're with us here on Business Today. I'm Abha Bakai. Let's take you through all the market action this afternoon. Here are the headlines. Modi pitches India as a global AI hub, saying humans and AI will co-create and co-evolve while urging inclusive growth and lifelong learning to prepare for the future of work. A Delhi declaration issued earlier today focuses on democratizing AI, strengthening multilingual and use case evaluations. Mukesh Ambani promises to do to AI what his company did to telephony and data, says Jio will offer cheaper AI access to the country, company to invest 10 lakh crore rupees and build sovereign AI compute infrastructure to make AI accessible nationwide. TCS joins the AI big league. Tata Group partners with Sam Altman's OpenAI for a mega AI push. 100 megawatt infrastructure project scalable to 1 gigawatt. Enterprise ChatGPT and agentic AI solutions to power India's AI ambitions. D Street under pressure. Sensex tumbles 1,000 points. Nifty below 25,600. Profit booking setting in. Auto, FMCG, realty and bank stocks lead the decline. Pharma counters see selective buying support. Brent crude climbs back above $70 a barrel, surging 4% after U.S. Vice President J.D. Vance said that Iran ignored key American demands, raising fears of possible military action. Back home, HPCL, BPCL and IOC shares fall nearly 2% each. Okay, first let's take a look at all the market action this afternoon and where we're at. Profit booking setting in really after we thought that perhaps there'd be some respite. Sensex now down 1,000 points as markets extend losses, and the Nifty also seeing a cut in today's session so far. Let's pull up the major index for you. The Nifty Bank is also down 1.5%. Pressure coming in on financials, particularly, in fact, this afternoon. The banking index is down over 450 points. I think 60,100 is where we're at. We've got some of the major stocks also on the downside. We'll pull those up for you. ONGC, of course, up with all the news around Iran, but all the refiners are actually, the marketing companies are all actually seeing some amount of selling pressure. The gainers list is short and sweet right now. We've actually seeing a lot more pressure on the downside. So Hero, Ultratech, Trent, some of the names that are seeing some cuts this afternoon. We've also got expiry, remember, so some amount of resettling that's taking place there. BEL, Ultratech, Bajaj, so lots of profit booking that's really setting in this afternoon. So metals, auto, keep an eye on HUL, Jindal Saw, some of these names that were moving earlier this week as well. But clearly, the markets are losing ground at this point of time. Abhishek Basumallick joining us, co-founder and fund manager, Rama Management. Abhishek, we are also, of course, seeing some amount of settling due to expiry. What's your view on how the markets are reacting today?
So good afternoon, Abha. I think, the market has been in this range for a while, and we were all expecting that post clarity of the US tariff deal going through, things will get better, but apparently doesn't seem so. So I think, again, we are back in that range that the market has been. So it's just playing out in that range. I don't think there's much to read into day-to-day ups and downs. It's just that we are stuck. Global money is not flowing in as much as we thought it would. And basically, single line answer to your question is we are stuck in the range.
Absolutely stuck in the range, and I want to understand really what's going to move that. But first, let's also listen in as the Prime Minister today laid out his vision for the future of work at the India AI Impact Summit, saying humans and artificial intelligence will co-create, co-work and co-evolve in the years ahead. He stressed that AI will make workers smarter and more effective, not replace them. Listen in to what the Prime Minister had to say.
AI हमारे काम को और अधिक स्मार्ट, एफिशिएंट और इम्पैक्टफुल बनाएगा। हम बेहतर डिजाइन करेंगे, तेज बिल्ड करेंगे और बेहतर डिसीजन ले सकेंगे। इससे और ज्यादा लोगों को हायर वैल्यू, क्रिएटिव और मीनिंगफुल रोल्स भी मिलेंगे। ये इनोवेशन, एंटरप्रेन्योरशिप और न्यू इंडस्ट्रीज के लिए बड़ा मौका है। इसलिए हमें स्किलिंग, रीस्किलिंग और लाइफ लॉन्ग लर्निंग को मास मूवमेंट बनाना होगा। साथियों, फ्यूचर ऑफ वर्क इंक्लूसिव, ट्रस्टेड और ह्यूमन सेंट्रिक होगा। अगर हम मिलकर आगे बढ़ें तो आर्टिफिशियल इंटेलिजेंस पूरी मानवता की क्षमता को नई ऊंचाइयों तक ले जाएगी।
Okay, well, you know, how much do we blame tech for everything that's happening in the stock market, Abhishek? Because we got to blame someone, and really, that's been the spoilsport, hasn't it? Today, it's not. Today, it's not the one that's the worst hit, but really, IT is where it all started and ended.
Actually, if you see, if you just take one step back, what you'll realize is amongst all that talk that has been going on for the last 4 or 5 quarters, the PAT growth for across this, across board has been very, very poor. In fact, I'll just give you some data points that I was going through today. For the last 5 quarters, the aggregate PAT growth, right, has been less than 10%. The best that we had done was 9.6% in Q2 FY25. So that's like 5 quarters back. For the first time this quarter that we just sort of ended with the results, we've seen a PAT growth of 13.3%. Now that is something that will take some time to get into the market psyche, because I think we will need one more good quarter with good results. You just alluded earlier to what would change this range that we are stuck in. And I think this is what is going to change. We are going to see better results coming through. And, despite all the macro noise, our fundamental challenge was that corporate results, earnings growth was not coming through, which is for the first time after 5-6 quarters, we are seeing some good movement on the ground.
Let's talk about that a little bit more, because we had those capex numbers that came through, and despite everyone feeling that that companies weren't picking up, the numbers suggest otherwise. And even across infrastructure, industrials, take a Tata Steel or JSW, for instance, there's a lot of capex that's actually been planned. So do you see some of that reflecting in stock price movement going forward?
Actually, very, very definitely. Again, we are seeing capex coming back, especially private capex coming back significant, and I think that's something which is very interesting, right? We've not seen private capex at all for a very long period of time. Now, just again to give some numbers, I think the last time we saw capex going up for a couple of years in a row was in the 2004 to 2007 cycle. Pretty much post that has been flat. I mean, the growth has been flat. Now, for the first time, again, we are seeing capex growth coming through. So these are small numbers. I'm looking at the debt or the net balance sheet that is there overall in the across the corporates, and we've not had this kind of net debt to equity for listed companies for the last 10 years. So overall, I think even though the macro situation globally, there's a lot of things that we need to worry about, but structurally, from the corporate side, things probably are starting to look much better.
All right. Now, India has unveiled the New Delhi Frontier AI Impact Commitments, a declaration that outlines voluntary pledges to advance inclusive and responsible AI. At the AI India Summit, Union Minister Ashwini Vaishnav announced a declaration highlighting key focus areas from generating real-world AI insights using anonymized data to strengthening multilingual and contextual evaluation, especially for the Global South. The goal is to make AI powerful, inclusive, and development-driven. Listen in.
Today, leading frontier AI companies, along with India's own innovators, such as Sarvam, BharatGen, Gyani, and Socket, have come together to make a set of voluntary commitments that reflect a shared vision for inclusive and responsible AI. Can we have the commitments displayed? Yes. These are two significant commitments. First, advancing understanding of real-world AI usage through anonymized and aggregated insights to support evidence-based policymaking on jobs, skills, and economic transformation. The second is strengthening multilingual and contextual evaluations of AI systems to ensure that AI works effectively across languages, cultures, and real-world use cases, especially in the Global South.
And sticking to AI for a moment, Reliance Industries is planning mega 10 lakh crore rupee investment to power India's intelligence era. Mukesh Ambani, Chairman and Managing Director of Reliance Industries at the AI Impact Summit 2026, has also announced building sovereign gigawatt-scale AI data centers and a nationwide edge compute network as well. And he has said that India cannot afford to rent intelligence, asserting that Jio will make AI as affordable and ubiquitous as internet connectivity. Listen in.
Every sector of the economy and every facet of social development and every service of government. Jio will do so with the same reliability, quality, scale, and extreme affordability that transformed connectivity. India cannot afford to rent intelligence. Therefore, we will reduce the cost of intelligence as dramatically as we did the cost of data. Announcement 2. Jio, together with Reliance, will invest 10 lakh crores over the next 7 years, starting this year.
A big AI partnership announcement. The Tata Group will establish India's first large-scale AI-optimized data center, purpose-built for next-gen AI training and inference. Partnering with OpenAI, the project will begin with 100-megawatt capacity and scale up to 1 gigawatt. Here's Aishwarya Patil in an exclusive conversation with N. Chandrasekharan, Chairman Tata Sons, on this mega deal.
You can just tell us about your OpenAI partnership, what's on the anvil and what all can we explore with OpenAI?
I think we have announced a partnership where we will bring 100 megawatts capacity initially for our state-of-the-art AI data center, and it will scale over a period of time to 1 gigawatt.
Okay.
And we are building a lot of agentic AI-based industry solutions,
Sure.
which we will leverage OpenAI's platform.
So yesterday NPCI unveiled that they're partnering with Claude and some of the others so that agentic
So
AI
we
for
have,
farmers can be used. Something
So
on those lines?
we are focused on building capabilities across all layers, and we will work across layers.
Now, they're the three brightest minds on the AI firmament, each having caused a quake of his own on the revolutionary tech. New Delhi had the unique opportunity of hosting Sam Altman, Dario Amodei, and Demis Hassabis earlier today. All three had this to say about the future of AI.
On our current trajectory, we believe we may be only a couple of years away from early versions of true superintelligence. If we are right, by the end of 2028, more of the world's intellectual capacity could reside inside of data centers than outside of them. This is an extraordinary statement to make, and of course we could be wrong, but I think it really bears serious consideration. A superintelligence, at some point on its development curve, would be capable of doing a better job being the CEO of a major company than any executive, certainly me, or doing better research than our best scientists.
And there are only a small number of years for AI models surpassing the cognitive capabilities of most humans for most things. We're increasingly close to what I've called a country of geniuses in a data center, a set of AI agents that are more capable than most humans at most things and can coordinate at superhuman speed. That level of capability is something the world has never seen before and brings a very wide range of both opportunities and concerns for humanity. On the side of risks, I'm concerned about the autonomous behavior of AI models, their potential for misuse by individuals and governments, and their potential for economic displacement.
And now in 2026, we're another threshold moment where AGI, artificial general intelligence, is on the horizon, maybe within the next 5 years. And we're seeing these general purpose systems, foundational model systems, becoming increasingly capable almost week by week. So this is obviously an amazing opportunity that we should all grasp, economic and productivity, as well as in the sciences. But it's also something that we have to approach with humility and understanding that we don't have all the answers yet as to how this technology is going to develop and to be deployed into the world.
All right. Lots of action on AI, and remember the AI summit even extended by a day for those of you who haven't got your dose. Let's talk about Nifty Bank. It's down about 1.5%. Abhishek, what is happening to the banking pack? And, this is one area where everyone has innumerable buy calls, but we just haven't started to see that action come in.
So I think two things. One, it's more probably related to the expiry today. And the other, maybe the smaller part also that's playing out is that bond yields in India are not going down, even though rates have been cut. Bond yields have been holding firm. So that's maybe one of the reasons why banking stocks are not reacting the way people or investors are expecting. But nevertheless, I think if I look at the fundamentals of the banking sector, they've been much better in the last couple of years than before. Lending is picking up, credit growth is picking up, which is good. So overall, I think not too much to worry about. Government also is taking a lot of, they're discussing about merging of some of these PSU banks to create larger, stronger ones. So overall, I think there's going to be continuous action that we will see in the banking sector going forward.
All right. What about on some of these oil and gas majors? ONGC, of course, running up, again, on the back of all the geopolitical traction. Reliance is a different story. I think there's more of a geo play there. But given some of those big announcements today, wanted to also get your view when it comes to the, the other big boy in the market.
So basically, ONGC has a very large correlation with what is happening with the crude, and given the situation with the Iran-US conflict, nobody knows what's going to happen there. Crude is spiking up, so we're seeing that reflected positively in ONGC and Oil India. We're seeing it negatively in the other HPCL, BPCL kind of stocks. Reliance, I think, more of a play as a conglomerate, in terms of the data center and all the announcements that's going forward. So Reliance is now becoming more like a large India-focused, India-centric infrastructure play. That's the narrative rather than just the refinery and things that was there.
Absolutely. All right. Banks, IDFC, HDFC, Punjab National Bank, Canara Bank. So banks across the board, IT once again, oil marketing companies. This is really where the weakness is coming in from. Hero is down 3.5% this afternoon. Not looking too great there. So pretty much across the board, we are seeing weakness come in, at least today. ITC also down about 2% or so right now. Pressure continuing there. So that seems to be the layout when it comes to the index. What about the broader markets, Abhishek? And let me get some of your top picks in, or what you're watching when it comes to the broader markets.
So I think pharma is holding out quite well. We've seen that pharma results also have been quite decent. Pharma, healthcare, both. Chemicals looks to be very interesting simply because we are seeing China sort of taking off a lot of subsidies, a lot of taxes that was there is getting reintroduced, so that China is now having a stated policy of funding only high tech, cutting edge industries like semiconductors and things like that, AI and things like that. So they're moving away from chemicals and steel and the bread and butter industries. So again, globally, India has an opportunity in all of these as a China plus one play. More or less, the tariff things are sorted out. So overall, I think manufacturing is going to be the theme. As a contrarian, I would say even IT would be a good theme to look at.
Okay. All right. So within IT, what would you be trying to get into at current levels?
So I think if you look at the large, I mean, just these stocks have fallen off the cliff simply because people were thinking that clients are just going to use Claude or some kind of co-work version to build their own software. Enterprise software does not work that way, right? I mean, you will not jeopardize your business, your enterprise by some software that somebody is just building on the fly. It requires integration, it requires security. I mean, it's a big deal. And what is increasingly going to happen, in my opinion, is that these IT services companies are going to be asked to create or integrate a lot of AI into the existing services. So short term, once this all the cloud sort of passes over, my guess is you will see increasingly more of AI services being offered by these IT service companies. So you can take your pick across the larger ones if you want. If even the mid-tier IT, I think all of them will do well.
All right, great. Let's take a look at some of those closing ticks now. Of course, going to be closing pretty weak on the index, 25395, down about 1.5%. Reminding everyone again that it is expiry today, and that's really also why you're continuing to see some of this kind of fallout. Let's take a look at the losers, and we pretty much had losses all around, even in sectors like metals, auto, or financials, where otherwise the sentiment is quite positive. Let's also take a look at some of those 52-week lows. So IT, clearly, Wipro, TCS, some of the names there that are seeing consistent lows right now on the back of all of that selling that we've been having. Some amount of resistance from a pharma, ONGC, of course, climbing on other macro factors, and some of the other favorites in the market like TVS, L&T, Titan, all of them also in the red today. So nothing really managed to stand out right now. Let's take a look more specifically at the losers and really where some of the major selling came in this afternoon. We had Persistent Systems, again from the IT pack, down 5%. BPCL and the OMCs were all trending lower. DLF from the real estate pack, Indian Hotels, Hero. So some of these names, Hero in fact has been seeing about a profit booking of late. Then we also saw names like a BEL, Power Finance, HAL. Market didn't really show anything too much respite. Remember, just out and out profit booking that we saw coming in today. Trent, Tata Power, or everything in cement. Quality Walls, of course, huge volumes post-listing, again on the downside today. A whole host of these names. Two-wheeler counters also all trending lower today in trade. Again, no respite on that front, despite positive calls from brokerages. Shriram Finance, Kotak Mahindra Bank, a whole host of the banks. In fact, the Nifty Bank was one of the hardest hit in today's trade. IDFC First Bank was down about 2%, for example. So a whole host of banks, auto. So again, from the banks like an IndusInd, for instance, Punjab National, Access, everything down about 1.5% or so in today's session. Consumer durables or FMCG have also been trending lower. That entire pack also has been seeing a fair amount of weakness coming in for this entire week. Asian Paints also following suit. So clearly the trend was weak across the board, and some of those key pockets such as IT, FMCG, and banks putting a lot of pressure on the index. Auto especially 2.5% lower today as well. Really did see some amount of a batting down in today's trade. So not a great day when it comes to the bulls, closing over 400 points down. Just a smattering of gainers for you on your screen when it comes to the Nifty, and a whole host of losers. Advanced decline ratio really taking taking center stage for the losers today. And even in the broader markets, if we take a look at where some of the action was and pull up some of those losers for you on your screen, you would have seen deep cuts, whether it was the mid caps or the small caps. Nothing really was spared in today's session. Physics Wala was down 3%. Keynes Tech, for example. I'll pull up a whole host of other names for you as well from the broader markets. As you can see on your screen there, that did see some amount of a battering today. So not pretty, and we have been stuck in a range-bound sort of zone. So Abhishek, I guess the big question is, what next?
So we'll have to wait for corporate results to get better. I don't think there's any other way out of this unless we get some dramatic positive announcement or negative surprises from the macro side. I think we probably still going to be stuck in a range till we get to the next quarter results. That's the unfortunate part of it.
All right. I mean, we just had one set of earnings go by, but clearly not enough. Perhaps sustained performance is what the market is looking for, and it could possibly be a slower year in the making for bulls. We leave it there for now. Abhishek, thanks so much for joining us, and that's where we leave it when it comes to trading action today. But do tune in tomorrow morning as we come back with market opening. Thanks so much for watching.